Hi friends, welcome back. So our buddy, ticker symbol U, aka Alex Divinsky, is out doing some paid pumping again. I want to share some thoughts on this and get yours as well. So first, there's our Alex dude there. He's smiling as always, and now he's got the, shush face. The title of the cover is 3 stocks about to explode, and then the title of the most recent video is I'm buying these 3 stocks to get rich without getting lucky. And then his last video, if you guys remember, he was paid $47,000 to pump a penny stock. So what's he pumping today? Let's have a little bit of listen to this thing, and I'll share some thoughts. And again, I want to hear you guys also.
Years or longer to go public. That means investors like us can miss out on most of the returns from the next Amazon, the next Google, the next Nvidia. So I spent a lot of time digging into this, and the Fundrise Innovation Fund is a great way to invest in some of the best tech companies before they go public. Venture capital is usually only for the ultra wealthy, but Fundrise's Innovation Fund gives regular investors access to some of the top private pre-IPO companies on Earth.
All right, so the way he's portraying this thing is like, oh, this used to be only available to ultra wealthy people, but I'm sharing this really great secret with you. Here's the thing, guys, is this is paid. So you can see here he's pumping his Fundrise, and I've actually done a video on Fundrise before. I'm not a fan of Fundrise, and I'm kind of show you why as we go through this stuff. And I also want to show you his disclosures here. So it's this part here. It says all content on this channel is for informational purposes only and should not be construed, this again, his disclosure, should not be construed as professional financial advice or recommendation to buy or sell securities. So he's saying, you shouldn't watch my channel to buy or sell securities, but it's kind of ridiculous on these channels when they literally say, I'm buying these 3 stocks about to explode. So that's a little of a trick that a lot of these channels do. It's like saying not financial advice, then you give financial advice. So he's saying this isn't to recommend buying stocks, then he's saying I'm buying stocks, and then he literally does a paid commercial to buy said thing. It's a bit disingenuous if you ask me. So also says here, trading stocks, ETFs, and other securities and or cryptocurrencies poses a considerable risk of loss. Neither host, is a key line here, neither host or guest can be responsible for any direct or incidental loss incurred by applying any of the information offered. So he's trying to protect himself here by saying, don't hold me responsible if you lose money. And that's what he's up to. The thing is like, I know a lot of people say, well, Chris, you're so dumb. Alex is awesome because, he's been pumping NVIDIA all along. He's the best investor ever. But guys, if you understand that Alex was like built his whole channel telling you how awesome ARK Invest is and all the penny stocks and stuff at ARK Invest are, because Alex has pumped a bunch of that kind of stuff also that's been tied to ARK. So the problem with ARK, and it's like ARK Invest video after ARK Invest, Kathy Wood, etc., is that he was selling this, pumping this stuff at the top, right? So, this stock is down 68%. This is the ARK Invest fund, not a great performer, and probably a lot of the stuff that Alex is pumping you will do the same kind of pattern, right? Pump and dump. I've looked at Fundrise stuff before. I'm not a fan. Their fees are too high, and they just spend a ton of money on marketing to essentially regular people trying to pretend like, oh, here's the secrets of rich people for regular people. Like if it's a secret, you're not going to find out it from some random dude on YouTube. So you can watch my old review of the Fundrise thing if you like, but it's right there. The new thing that they're pumping now is this innovation fund stuff. This is why you want to read the fine print. So it says right here, annualized return since inception, 1.4%. That's just not good. I mean, it's not even keeping up with inflation even, right? And then you get some sort of distribution at 0.24%. If you dig through the details of this thing, so I guess they used to have a thing. So I think they might have changed the name or something. It says here, Fundrise Growth Tech Fund, LLC. So this is, I guess, something old they had. This orange line, you can see it was basically flat. And then compared to just the NASDAQ, the dotted line was really outperformed it. In 1 year, their Fundrise Growth Tech Fund had 1.53% return compared to the NASDAQ at 34% return. When you dig into this thing, so this is as of June 30th, 2024, because you want to see what they're holding. I felt like some of the stuff was a little bit misrepresented, and I'll show you what I mean by that. Because if you look at their marketing thing down here, right, it says like, okay, we got these 19 assets, and it lists all this different stuff, right? So Anthropic's the top of it because they do alphabetically. They have all these different things in here, and you guys may or may not know what some of this stuff is. The thing is that caught my eye is like, okay, I know what Uber is, so you're thinking, oh, Did you, get in Uber early or whatever? The problem is, though, these are corporate bonds, right? So some of this other stuff, it says type, late stage company, for example, an Anthropic situation, or Canva, late stage company, or Jetty, whatever the stuff is. But then you look at some of these other ones that says corporate bonds, and you look at the holdings of this thing here. You scroll through it, 'cause this is where you gotta read the fine print, because you're giving money to this fund. They charge you a fee to manage your money, etc. And you want to be, investing in, good companies or whatever. So it looks like the majority of the stuff, 20% of their holdings is Databricks, then DBT Labs is at 10%. The Anthropic, which is the one I guess it would be the sexy one, that's about 4.9% of this thing. And you can go through this stuff. The reason why I was saying it's a little bit, I felt misrepresentative is, the corporate bonds of, was it Twilio, Uber, Match, I guess Block's in here. It's all like around, let's see, what's the Uber one is like 0.7% of the fund. Block is 0.7%. It's like a relatively small. So these kind of, bigger name stuff that you saw in there, it's a relatively small. And then the most attractive one, which I guess maybe is, I say maybe. The reason why I say maybe is you read through the stuff, and because this stuff's private, this is venture capital stuff, private, pre-IPO stuff, none of this like financial disclosures of any of the companies is public. So I really I can't look through the books of these companies. I don't know. I don't know what their financial situations are. All I know is that, innovation, this innovation fund thing, they're going to charge you. It's pretty high. I think it's like 1.8% or something like that of fund. Let me see if we can find it here. There's a fee. I thought it was 1.85% management fee. That's pretty high for those of you who do this stuff. And let me explain. So if you were just to do the NASDAQ, just for example, so in the past year, say you're getting 37%, which is pretty good. Again, this fund thing here, their return or rate of return is 1.4%. So just right there, it's not very attractive. Then if you just want to buy, and there's different ways to do it. So I'm just showing a popular one. So this is like the NASDAQ 100, QQQ. It's a very, very popular fund. This is, or ETF, I guess you call it. This is a 0.2% expense ratio, right? Compared to this thing, which is like, was it 1.85%? So management fee. It's just, you're losing out so much on this, and this fees go to pay, the people who manage the fund, probably pays for their marketing fees that pay Alex, etc. That's ticker symbol U. Again, it's just not worth it. When you mess with this private stuff, right, it's risky, right? So it's not nearly as regulated as other things, because again, this stuff's not public. They try to say, this is the secrets of rich people to get rich. That's what Alex is trying to tell you. But remember, he was pumping Kathy Wood, etc., and he's getting paid to tell you these things. So take that stuff with a grain of salt, Mr. Smiley Face. The other thing too, it just reminds me of the Meet Kevin dude, which we talk a lot on this channel, where they try to pump me. Oh my God, guys, I got this great opportunity for you, and it's going to be so awesome. You're all going to be rich, and it's like, shh, don't share the secret. And then they go to bed and show you coupon codes and all that stuff. When you dig through details, and I'm using this is Meet Kevin's house hack thing. I'm using an example because you always want to read the fine print of this stuff. So for example, in Kevin's situation, I think he promised, because someone asked me about this the other day, what's going on with house hack, and I remember I'm pretty sure it was June. He was promising they were going to open up their books and show you audited balance sheets and disclosures and stuff like that. And I haven't seen anything, so I don't know what I'm investing in when I'm investing in, say, Kevin's thing. And I gave an example. This is on Kevin's prospectus that he's handing out to people of like, hey, this is what you're investing in if you give me money. And it just said property 1, property 2, property 3, 4, etc. So like, I don't know. I don't know. I don't know where these things are. And that sort of gives me pause. The point is that, when you get involved with any of these types of people, and they're being paid to promote you certain kinds of things, and then you look through the details, and you can't get some of the details that you want. So for example, in this situation, I felt like from the marketing, it just seems like and see, in this situation, it's not lying. Like, they have Uber in there, but it just to the lay person, the way they would do their advertising, I'll just say it's not exactly what it looks like. So that's why you have to do the details and stuff. And the way they protect themselves, and the Alex is like, oh, you know, I never said to buy. And what does he say? The wording of it is, you know, don't take this as a recommendation to buy or sell. Like or if you lose money, right, you can't hold me responsible. Just when they put that kind of language in their videos, and yet they have this, you know, 3 stocks will explode next to video stuff. That's the whole thing I just find very, very disingenuous. And I hope you guys understand sort of my perspective on this stuff, sort of why, you know, if you want to put money into the market, or say you want to go more tech heavy, just going NASDAQ is actually totally fine in comparison, right? I mean, you guys can see you're getting better returns just doing this. You're going to pay less expense or management fees. And also too, this is all public. So, you know, you can see what's in it. You can see the financial disclosures of this kind of stuff. You know, and guys, you do what you like with your money. I'm just trying to here to help you to sort of, you know, learn what to look for when you're sort of surveying the landscape on YouTube. So I'd be careful that, again, this guy's paid to say said things. So, and writing disclosures of saying, you can't hold me responsible, haha. So please share your thoughts for this stuff. That's your Alex Divinsky, ticker symbol U, and Fundrise and Innovation Fund. I'm not into it myself, and that's it. So I'll catch you guys all in the next video.